Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on investing opportunities in dollar-denominated assets. The sustained devaluation of the naira is a key concern for investors who are looking to preserve the purchasing power of their savings and investments. Depreciation or devaluation simply means that naira has lost value against any foreign currency. You will need more naira to buy a single unit of another currency. The naira at the Central Bank of Nigeria's official FX window has depreciated by an average of 8.2% annually in the last 11 years and has devalued by 66% from 150 naira 29 kobo per dollar in 2011 to 441 naira 83 kobo per dollar as of 14th October 2022. Year to date, the naira has depreciated by 23.5% from 568 naira per dollar to 742 naira per dollar as of Friday, 15th October 2022 in the parallel markets. The weakness of the naira during the period of high crude oil prices is unusual. However, large-scale oil theft has crippled exports and reduced FX inflow. As crude oil exports continue to account for over 90% of Nigeria's exports, Nigeria must diversify the sources of its FX supply to have a stable currency. The devaluation of the currency matters to you as an investor because it increases the prices of imported items as well as locally produced items, which erodes the value of naira. In view of these considerations, it is imperative to have savings and investments in foreign currency to hedge against currency devaluation or depreciation, especially if you have potential FX obligations. Most foreign currency investments are typically denominated in US dollars. Investments that are dollar denominated generate two types of returns. One, the interest payments in the case of Eurobond and periodic payouts for dollar mutual funds. Two, return from changes in the value of the naira against the dollar. That is, if the naira loses value against the dollar, you will gain an additional return. For instance, consider investing 1 million naira at 600 naira per dollar. Total investment of $1,666.67 in a dollar-denominated investment at an annual return of 7%. If the naira depreciates or loses 19.1% of its value against the dollar, the exchange rate becomes 742 naira to $1. Your initial investment of $1,666.67 at 7% per annum becomes $1,783.33 in 1 year. If you decide to liquidate your investment and convert back to naira at the assumed rate of 742 naira to $1, the value of your investment becomes 1,323,233 naira 0.33 kobo. Effectively, your total return is 333,233 naira 0.33 kobo, or 32.32% in 1 year. These are some investment options you can take advantage of. 1. Dollar-denominated mutual funds. Dollar-denominated mutual funds allow you to conveniently invest and earn returns in foreign currency. The funds invest mostly in federal government and corporate Eurobonds. This investment is low risk and has a considerable minimum investment amount ranging between $100 and $1,000, depending on the investment outfit. Mutual funds are regulated by Securities and Exchange Commission and professionally managed. Due to the difficulty of purchasing dollars for investments, some platforms allow you to convert your naira to dollars at the prevailing rate to invest. Alternatively, you can purchase and transfer your dollars to the investment outfit. Please note that cash dollars are not allowed for investments in Nigeria. 2. Eurobonds. Eurobond is a type of bond issued in a currency that is different from that of the country or markets in which it is issued. For instance, if the federal government or GT Bank borrow in dollars from private investors in the international market, this is called Eurobond. If you want to invest directly rather than through dollar mutual funds, the standard minimum for investment in Eurobonds is $200,000, but can be lower depending on the firm. Sourcing for dollars can also be a constraint. The interest rate varies from 10% to 14% depending on the rate of the issuer and the maturity of the Eurobond. 3. Fixed dollar deposit. It is simply purchasing dollars and fixing the funds at an agreed interest rate with your bank or investment firm for a fixed period. The interest rate ranges from 4% to 12% depending on the investment amount and firm. This is better than leaving the funds in your domiciliary bank account, as you will only earn meaningful returns if there's a devaluation of the naira. 4. Foreign stocks or shares. This is recommended for investors with high risk appetite due to the volatility of stock returns. However, stocks provide high potential returns in the long run. You can sign up for any of the platforms to begin investing. However, please profile the investment platform via their regulators' websites before signing up. You can invest in stocks with strong fundamentals and consistent dividend history. Please listen to our podcast on investing in foreign stocks on our YouTube channel for more understanding. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.